Good afternoon. Start off with a disclaimer. Investing and trading in the financial markets can pose substantial risk to where one can lose all or more than an initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright. A little after 5 o'clock on Sunday, 5:15, 5:17 exactly, July 5th. Alright, this video is just going to be uh, about the dollar. I'll have a separate video talking about other things. But I just want to talk about where we are at in the dollar index. Right, this is all the history or the data I can find within Thinkorswim. It only goes back to 1995. Anybody who has any other historical data, please send it my way. I'd love to check it out. But I couldn't get it anywhere else, so I just stuck with this. And what you see here is just a bunch of we call them anchors, pretty much substantial highs or lows. All right, and this is going back to 1995 up until now. All right, this major trend line will hide right now, or actually major fib. We'll just hide it for the meantime. All right, from 1995, and we'll zoom in a little bit so we can see it. From 1995, these lows to highs, we had one traditional that went to and through profit targets. From there, you had another traditional where either if you measured from up, 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 up. Sheesh. Either if you measure from here or here, from this low, right? All right, pretty much has substantial uh, participation, which eventually led to completing a profit targets up here. All right, see the green line going across. So from there, you had a series of moves, of measured moves, from these lows to highs. All right, I'm not gonna snap it, but can you see it? But can you see the lines before I snap? That held from these lows to these highs, held. This one failed. Right, so you knew a trend change was in order. All right, and I'm gonna leave this one up. I'm gonna snap it, even though it broke. But you notice the profit target, 122.37 All right, we came 200, roughly 200 ticks away from completing this target. All right, but you knew it was likely to fail. This whole move, in general, the whole move in entirety, did not fail well into this level here. All right. However, he was giving clues that with this anchor, excuse me, am I measuring it wrong? Yes, I am. It's from this anchor, yeah, thank you, with the other screen. From here to here, this is the one that first had failed. Okay, so let's clear this again and just redraw that. Let's get rid of this one. This one worked. And this one failed. So being you know it failed, Mind you, the target is within stone's throw of the high. If you didn't get the chance, which this one to this one also failed, if you didn't get a chance to short this here, where could you have shorted it here? Well, you have a you're able to do that if you go back into the, I think it's the paper trading or think back. Or actually, you really can't go that far. You have to use a separate service to do that. And let's bring this up even more to 20 years day. You got your anchor on that 2-day candle structure on those highs. And this is all, of course, in hindsight. So on this 2-day candle high, which on it's another way to think of in order to get the anchors for like your 15-minute charts. So you would usually use a 2-day pattern or a 3-day pattern. You measure from either low to high or high to low. In this case, it's high to low. And let's bring this up close. You can see the accuracy. All right, so from these 121.29s to this 2-day, you can even go to the 3, but let's just stick with the 2. 2-day lows, and voila, you found your short. Right, it doesn't work all the time that way. It usually, if you weren't there to witness those days to see that that was actually your actual draw anchors, which that's called your first measured move after a trend break. So after a trend break, you're looking for the first measured move because for some reason, there's some kind of history attached to it, or something or someone is attached to that certain level, and they want their fill. Right? You didn't know where this one was likely to fail at, right? You was close. You was close, but in order to not waste any money, just blindly shorting it, you wait for the failure, and then you just redraw to those two anchors. Because if you would have drawn from high to low, you would have been shorting in that area and then gotten whipped out of your position. All right, so you're pretty much looking for what's deemed as a double top. All right. So from there, needless to say, that is in hindsight, what happened. Oh, I don't know why. Let's go back to a weekly chart. From the lows before the breakdown to lows, you had one extension. From these lows to these lows, you had another extension. From these lows, I drew that wrong. Actually, this was a measured move. I think I forgot one that was a measured move. But let's just skip that one. From these lows to these lows, you had another one. From these lows, nope, excuse me, we're still drawing from this one. And these lows down, down. The smallest anchor from these lows here broke, which broke the series. So you knew to stop shorting. And then of course, only if it was involved from all the way up here, you would be drawing from here. Why am I continually using this anchor? Because this was the low that produced a new low in this structure. Right? This is the low that activated the extensions because you started drawing from low to lows, anything below here, because you did not have a, a clear, concise draw to draw from in a series of measured moves. Right, so what you was just doing was just falling. Right, this was what you call an extension down, straight down. Right, this even exasperated it more to where you would draw from these lows down. You had one, you had two, and then it broke. In this area right here, broke. So when this had broke, which was just recently, when this broke, and this was sheesh, right, pretty much end of 2014, just about 2015. You only have one other way to measure this, and that is from all the way halfway back. That is this. Show all drawings. Right. This is where we're coming into resistors right now. That's measured from the 121s down to the 71s. And this risk band is from 96 up to 102s. And top of this market came in so far 100 785s. So we'll see what happens from here. What has happened though for this leg, we had, do you remember before what the pattern was here? We had 1, 2 measured moves up. Well, for some funky reason, we had 1, and within it we had 2 measured moves up. The rest was extensions or measured moves. Okay, so let's get rid of this one, because as you can see, as we came up into this profit target, we just blew right through it. Right? I take this, I look at this all as one picture, and I just see this as a straight rip through. I don't see this as a series. This is a straight rip. And anybody who knew me from last year, I was very disappointed. I mean, I thought this was one of the biggest trades, and it was, but you just never had a pullback. You never had nothing from this whole consolidation area. You, if you was not long from the 79s, 80 areas, from the breakout, from when it pierced up above, when it broke out above this area, if you wasn't long from there, you was just blindly buying and just hoping. And when I see that happen, when you go straight up with no pullbacks, when you don't have, higher highs, stair stepping up, that's parabolic to me, and that signifies danger. It looks cool, but it's when it comes down, it's not cool. So again, let's go back. This anchor, if you're wondering what that is, this was when one of the small ones had broke here. This was your first, remember up here, this had the same bull crap here. It reverted back to an old short setup. So this was the first measured move here from this high, from this low to high. And it finally just now traded in this area. And let me just draw that real quick. It's measured from this low at the 7105 up to this little bullcrap high right here, right there a few days after. So that gave you that pullback, which had never happened between here and here. So I find these things weird. You'll find them as trend changes happen. Sometimes when somebody doesn't get their pullback, where do they get their pullback? If they're not willing to take it all the way from a halfway back level, well, they're gonna pull it all the way back to what was originally drawn, and it's kind of creepy, but it does happen in a lot of places. You just have to look for them. All right, so never mind this one, but from here on up, 7286s, if wherever you're drawing from the 84s, lows or highs, whatever. All right, you had your one pullback. Let's get rid of that. Within this structure, you had one, and that was it. That yes, you can make a case that didn't even trade. So what happened here? It went straight up in extensions. Straight up. Let's draw this out so you can see this. Make this candles a little bit bigger. Drag this now. That way so you can see it. These highs, these highs, bam. And you just went straight up. That was even an extension in of itself. Because again, it's just blowing through targets. Okay, that was this high to this high. So now this high, bam, this high to this high. Let's draw a little better. Bam. This high to this high, as small as it is. This high to this high. I'm telling you, just going. This is what you call just going straight up. Come on, would you click? I guess it's on the fibber. Oh, there you go. And this high to this high, and you're broke. What happens when something breaks? So something to be mindful. This is the first pop up, and now how do you get short on this? Or the same thing just like last time, the first measured move after the trend break. And that gives you, see if I can find this right. From this high to that low. You can see which high or low I drew from. You can bring it up in your own chart and just take it of those 2-day patterns. If you had measured from here, it was this high. It was somewhere measuring from here to here, and then the candle had broke. Yeah, it was obviously this one. So the two candles that preceded it, or three, which they're just about the same, high to lows, and that was your short. Just like X amount of years before, the same pattern. So you'll find in history, things don't repeat exactly, but they somehow do, or people like to say they rhyme. And it's very true. So going forward, I still am in belief that this is a big fool's trade. This dollar long has been, all right. And how do we know if this is correct? Well, just measure from the highs, which is these 178 halves, to lows, 93 15s. All right, I'm a little off. You see, it's I wrote 16. All right, let's get this right so you can see. 175, 78 halves, 93 15s. We'll go and change this now. 178 halves, 93 15 halves. All right, this is clean trade. And over the coming days, if this dollar cannot get above these 97.87s, I think we just confirmed a major trend change. A major trend change. And this trend has only really been in act for about a good year. And this implies that this dollar has a lot of downside to go. Okay, so going forward, let's see what happens with this resistance level. If we start to see that we're trading in the next week, 2, 3 weeks, 91.35s without trading above 97.87, this trend is in full, full effect. Bigger targets up at the 59.19s. So trade them safe.